Welcome and thank you for joining us this month for this month's The Big Picture, where we take a look at how the markets have done from the stock market to the bond market. And we're going to kind of jump straight into the charts and take a look. The month of November was a pretty good, nice bump up. I'm recording this today as of Friday, December 12th, and the market for December is down. So we're giving back some of those gains. We'll take a look at that towards the end of the video about where we at on a longer term basis. The first thing I want to do is get straight to the chart you see on the screen here. For the month of November, after we had a pretty good pullback in October, it reversed and we had a nice run up, and we're still continuing to run up even with the pullback in December. And as you can see on the screen here, we have the major markets that I kind of follow to give you an idea of how the markets in general are doing. One thing I do want to note is that as you see the different columns here, we have the two on the left, which are the United States stock market, which is the S&P 500, and the Dow Jones, which both represent what I consider large company stocks. They have really been doing very well over the last year and probably will continue for a little while. In my company, in my firm's models, we have been very heavily weighted on large company stocks, and we have pretty much stayed away from small company. We don't have anything and haven't had it for quite a while. We have very little, if any, international. So we're very heavily weighted in the two columns you see here. But most balanced accounts will have a little bit of everything, and so that's why I show them here. But it does show, as you can see, that they did have a pretty good run up for the month of November. 2.75% up for the S&P 500, 2.95% up for the Dow Jones, and the New York Stock Exchange, which I began to show last couple of months, which is the world's largest stock exchange. It is a pretty good random look at the overall market in the United States. So it has a lot of stocks in it. You can see it is not up quite as high, and the reason is because it does pull in some medium-sized stocks and some small company stocks. And speaking of small company stocks, that's the next column. You could see it down 0.02, so roughly about flat for the month. It didn't do very well. The small company stocks typically outperform over the very long haul, but lately they have not been doing well, especially in the month of November. The next column, again, I started showing to give you a little bit broader spectrum of how the overall markets are doing around the world. This is international, a representation of the international market. It is down 0.32%. So the United States is leading the charge in the stock market, and it's drawing even more money this way because the world is looking for a better return, and they're heading towards the U.S. market, and that's what's kind of giving us a pretty good run up. The next two columns represent what I consider proxies for well-balanced portfolios. These are two index exchange traded funds that I'll follow, and are a good representation of a balanced account. This is a moderate allocation, roughly about half stocks, half bonds, and it's up about 0.77% for November. And a conservative allocation, which would be more of about 60% bonds and 40% stocks, is up 0.67% for the month of November. And the last column is the bond market. The overall bond market was up 0.66. And as you can see to the right, we have a pretty, I would call, even distribution here without these two on the international side and the small company stock. But I get a few emails, and I've talked to a few people over the last couple of months, and a lot of people have been watching TV and watching CNBC and a few things. And when you see the stock market as represented by the first two columns have a pretty good run up, it gives you an idea that your account probably should be up just as much. And in reality, irregardless if you have your account with my firm or not, a well-balanced account won't be up anywhere near what the S&P 500 or the Dow Jones is unless you have all your money in there. And you have to remember that over the longer haul, when these type of investments go up like that, they also go down, and somewhere in the future you're going to see this column here well up in the higher range here, and these columns will be down here. So when you have a little bit in each basket, as the old saying goes, don't have all your eggs in one basket. So if you spread them around a little bit, you won't participate in those big run ups, but you also won't participate in the big run downs. And so that's why I illustrate these two columns. Gives you an idea of what a good balanced account would have done. And we'll look at a little bit longer term here on the next chart. This chart here is with all the same investments as I just showed a second ago. However, what this represents is for year to date. So for the year of for the year of 2014 through right at the end of November, as you can see on the chart, December 2nd, we had a end of the month with the Thanksgiving holiday, and so I kind of extended it through the next day to kind of give a better reading. So this is how the markets look for the full year, and as we just showed before, and it has been trending for the whole year, the S&P 500's up 13%, Dow Jones up 10%, the New York Stock Exchange is up 5%. The Russell 2000, which is small company stocks, you can see it not doing well for the year at all. So that's a 0.4, barely 0.5% for the year. The world market without United States is down 0.9, so it's not doing well. But a well-balanced portfolio is about 4.8 for the year, and a conservative portfolio is up about 4.2, with the bonds up 5.48. So as I mentioned just a second ago, these three columns on the right, well, more so these two, when you're balanced, you will find that it gives you a better and smoother ride by having a balanced portfolio. You won't participate in this big 13% run, but at the same time, you won't have a big drop or a drop like this. It kind of works out to have a well-balanced portfolio. Now, this is for the year, and the previous chart I showed was for the month, which I do on a monthly basis. But we do want to take a look at my traditional charts that I like to show called point and figure charts. I like these charts. I've been using them for years. I learned how to use them in college, and I just think it's a better method of taking a look at how the market's doing without all the day-to-day movement in the uptick and downtick. This is a daily chart on the S&P 500, and when we had a drop in October, this is the zeros going down. As I mentioned, when you have zeros coming down, that's the market going down. And when you have X's, that's when the market's going up. And I had mentioned in previous videos that we want to hold this blue line, and this blue line's been here for quite a while on the daily chart, and sure enough, we held that. It turned right at the blue line. It's amazing how that works sometimes, but this does represent a lot of software that calculates where support usually is, and the market turned, and it went straight back up, and we've been climbing ever since then. Now, this is through the end of November, and we'll look at another chart, shows a little bit more up to date, but right now, as of November, we were climbing and continue to climb. So we had made new highs, broke out to new highs towards the end of the year, and just went straight up. So this is a nice view of how this type of chart gives you a little bit more comfort in that you don't have to watch the day-to-day stuff. Just watch these support lines, and this will give you an idea and a feel of which direction we're going. And what you want to see in these charts is you want to see it go from the bottom left to the top right. What that basically means is there will be wiggles through, but we want it trending up to the top right, and that's what we see here. And it did turn where we kind of wanted it to turn. Now on the next chart, this is a little bit longer chart. This is my monthly point and figure chart. I've showed this quite a few times, and you can see we have a support here towards the middle. We talked about towards the beginning of the year, we broke out in 2013, I should say, and we have been climbing higher since. Then we had the green column you see here turn, the market turned and reversed. It went back up in the month of October, right in the middle, and we have been climbing ever since. Now we're pulling back as we speak a little bit. Again, this is recorded December 12th. So we have a little pullback going on, but we still have the stock market going from the bottom here to the top and climbing upwards with a little bit of wiggle in between. Now I'm going to kind of give you a feel on what we're seeing today. This is as of December 12th, as of today. So the previous graph, I'm going to jump over to the daily. I showed you a minute ago. This is a daily graph. Now this is not the monthly. This is daily. You can see we ended the month at a higher right around 27. It was actually 2067, but we ended up higher with X's. To reverse this, we'd have to drop below 2050. And so the way these charts work, as long as the stock market stays between 2050 and 2070, we don't do anything here. This chart looks just like you see it, so you don't have to watch the day-to-day stuff. Now, when we go below the 2050, we start adding zeros, and that's what happened on this chart. And we start to pull back at the beginning of the year, beginning of the month, and we reverse down. And currently, as of the timing of this chart, the time I'm recording this, we're at 2015, and so the stock market is reversed down again, but we haven't come all the way to the blue lines. No panic situation quite yet. And you'll notice I have a couple of X's at the top right here. These typically represent some support, and we're right at that support right now. So not to say we're going to hold there, not to say it couldn't go lower, but that usually gives a little bit of reversal on the market if it's going to reverse right there or maybe around the 1990 range. We'll have to wait and see. But one thing I do want to stress from this video, this is the big picture. Don't look at the day-to-day so much. We still are in an uptrend, as you can see on this chart, and I don't really see anything changing anytime soon. Especially, we're going through what's called the Christmas rally, and it's not that everybody wants it to happen. It's just traditionally going back for several years, we've had a pretty good rally in the stock market up until Christmas, primarily because of the public going and buying gifts and spending, which drives a lot of the market. Final chart I'll show you is a truly big picture. Doesn't have the point and figure chart. This is kind of a more common chart, and you can see at the bottom here it's from 2002 to 2014, actually through today, through around noon on the stock market. And we had a pretty good drop in 2003 and a pretty good drop in 2009, and we've been climbing ever since. And you can see the drop here towards the end is nowhere near any of these other drops. So it would be considered a normal pullback and expected and healthy, because the market has had a pretty good run up. So on a big picture look, the market is still moving higher and trending higher. I don't see a whole lot changing, and the reason I say that is that you will see a market look more like it did in 2010 or 2011, where it just starts really falling off, and I don't have that on these charts quite yet. I do watch it on a day-to-day basis, but if anything changes, I will definitely post something fairly quickly to the blog. Didn't mean to keep you too long this month, but I did want to bring you up to date on exactly what's happening through the middle of December, because I'm doing this on the 12th. Didn't want to leave you hanging till the end of the month, but also wanted to show that we had a pretty good run up in the month of November, as the first chart shows. So with the stock market having a pretty big month in November and us pulling back in December, we haven't even given back all of those gains yet. So it would be a wash if that would happen. We'd be back in the same place as November 1st. I'm not sure if that's going to take place, but we'll take a look and watch it for you. If you have any questions, you're welcome to send me an email or use the contact button on my blog, and we'll be glad to answer those questions. And as we often say, sharing is caring. If you like the video, we appreciate it if you can use the social media icons to share it with your friends and family, and they're welcome to subscribe to the blog. It's free, and we put these updates out periodically, as well as the monthly big picture. I appreciate you listening and watching this, and look forward to talking to you soon. Bye.